Alright, so it's July 17th, and I'm going to make a June recap video. So it's a bit late. Best month ever, so I made $270,000 in June. The highlight was MDLY, $72,000 trade. In previous videos, I've already gone over it enough, so I'm not going to get into that. Just, pushing the limits, scaling up. Biggest wins, I also had some of my biggest losses. That's going to come naturally as I scale up. So, instead of going into those plays, I'm just going to go over some recent plays that were kind of on my mind. So I'm going to talk about Moxie and, of course, NEGG. Very hot stock. So when you get a stock like Moxie, obviously every day the range on this is pretty incredible. And you're just getting daily candles that are just going up and down. I mean, $5 a share. There's a lot of volatility, a lot of opportunity if you are a day trader. Play some of that volatility, make some money, or lose a lot. That's an option too. But hopefully we win. Alright, so it's just in June this was a very hot stock, nice ranges. It would have like a morning move, 1080 to 1390, just a really incredible move. It would be on my radar because of that move. And then as the stock holds a range and shows that it can hold its gains throughout the afternoon, well, that's when you would look for some re-entry zones to get additional upside. And then basically as it would hold another range, I would be looking for entry zones to get additional upside. So it's really just a type of stock. I mean, I just play it every day that I think it looks nice. It's been on my watch list for weeks, months. I mean, it's just something I watch every day because it's just a nice stock, It's a nice range, nice volatility, something I'm going to be watching for a very long time, I would assume, until it just becomes too illiquid, I suppose. Recently, it was, on the multi-week, it was kind of holding an overall kind of range here. It was able to start breaking out of that range. This is when you have this action above the resistance area. It's kind of holding above the resistance, and then you get this harsh breakdown here. And what I noticed is it held really nicely on this former support. You also get the fact, it goes from $31 to $22. So you're looking at a pretty nice discount of $10 a share. So whenever you get a large price move and then a support hold from major multi-week support, that can be a great thesis for a bounce entry to get potentially to get a bounce back into the range, which I didn't expect it to go that high, but I was able to actually nail this 2270 dip buy entry. I sold it at 2480. I was just thinking, all right, it held this range here. I gave it a ton of time and it really should have broke out there. And it faked me out, broke down. I thought it was over. I locked in $5,000 and then it just has this really quick reversal. And I just find some crazy highs, So I did end up actually playing this area and scalped this for another $5,000. So Moxie, definitely a stock that's been good to me. Generally, the play that I did really bad on from Friday, $22,000 red day. That was just my own fault. I was doing so many silly things. I basically chased this entry here 27.70 breakout. There was a big wall. I was seeing it getting chipped away. And I entered it, anticipating it would just start to test the highs maybe. It gets to 28.25 and then it comes down. It feels really weak, and I know it's a cut, but I get stubborn. I don't cut it, and I had 7,500 shares. And I ended up selling it. I don't really know what my average out was, but I do know I lost probably $5,000 on that trade. So something like this, $5,000 goodbye. I made a lot of silly mistakes like that on Friday, where I would just chase something. Like the optimal entry zone was more like 26.70, maybe 27, but you start getting involved in here. You're getting involved in your major resistance from the morning. If your breakout idea doesn't work, you're going to be in some trouble. Additionally, if you don't cut when you know it's weak, well, that's how you take $5,000 losses on really a situation that I could have easily avoided because I knew. But again, when you're trading on emotion, it doesn't matter what you know, because you're not going to really be in control of your actions. Yeah, so that's Moxie. Very interesting stock, of course. You look at the long-term chart. It's pretty interesting. You can see again how stocks tend to wash out, will hold ranges for long periods of time, and then once they start breaking out of those ranges, there's just no telling how high they can go sometimes, like this one. You're looking $2 to $30, and it could go much higher, especially if it holds this range and then retests this area. You could look at an additional squeeze to $50, would be pretty likely in my opinion. So I'll be watching that very closely going forward. And I wanted to talk about NEGG. This stock was on my radar because of the long-term chart. I like to watch stocks that have held a range. I know it's a former runner because in 2020 it was able to go from 5 to 27. So I know it's a former runner. I see it was holding a really nice range basically for half the year or so. For a very long time, multiple months. It breaks down. Now what do you get though? You get that false breakdown recovery of the range, and that can lead to some really big moves. I've seen it on, I think I've showed this exact example on intraday charts, and we're seeing it on a multi-month scale. So pretty interesting. In this area, it's kind of hard to see because of the scale, but look at these very low volatility candles. I like that. Starts to perk out of the range. And I noticed it on the 29th. So let me take a look. So the reason why I was aware of it is because it perked on the 21st. It washed out. It was able to hold the former support and then have a really strong perk up in the morning. So that got my attention. I saw I held a range and I got involved in the 1060s, anticipating it would start to break out, probably because of the history. Thought I could get $1 or $2 a share, but it was too slow that day, so I just got out for very small win. Wasn't interested in swinging it if I can. I don't like to swing trade generally, so I just watched it the next day, and it kind of had a weird feel, very low volume, kind of. The TA wasn't necessarily something I was completely comfortable with, and the spread and things like that. So I kind of stayed away from it. But then this is a situation where it just goes up like crazy amount, and you sit there thinking, wow, I wish I would have gotten involved. It's really hard to know. It's really hard to know though. And basically all afternoon, I'm just seeing it like creep up and hold on very low volume to the point where I'm realizing the scale of this is going to be something special, perhaps, because what you're seeing is consolidation TA on a very, very large range. So what that means, think of a play that's consolidating before it even gets hot, before it gets explosive. Usually those price ranges aren't very significant at all. But if you look at this consolidation, it's multiple dollars. So you're looking at a $3 move on consolidation, which means if it eventually breaks out, you'd be looking at $10 a share plus, and that's exactly what we saw. So I was able to get this entry. It's just kind of one of those things where it hits some resistance, higher lows into basically a hive day test, really standard TA pattern. I take an entry in here, anticipating it's going to curl. I get the new hive day breakout, and I just hold patiently. Again, you just got to think about the scale. So in the morning, goes from like 11 to 13. Well, that's $2 a share. If it holds the range and has an additional breakout, the scales really like to match each other. So I'm gonna go for $2 a share, and I hit it quickly. I love it. I love those quick trades where I just lock up some quick gains. I think I made 10,000 on that, and I kind of quit watching it for that day because I'm just thinking, just what an incredible move, and then it just gets washes out so hard. I was just like, well, I think it might be done. I should have kept analyzing it because it made some really nice consolidation patterns that I definitely could have taken advantage of. So I guess that was an error. I didn't get involved again, and the move was incredible. And then I just kept playing it every day. Like in the afternoon, the dip holds. You just get a nice consolidated range into the afternoon where you can just take a curl entry. I get a sweet pop, just because the volatility is so great. You can just get some really amazing pops. And then this day haunts me a bit because I knew it was a great watch. I took my eye off it, and once things start running, that's it. You can't chase it, so just gotta let it go without you. And that one hurt. That was a big miss. Probably something I coulda, shoulda, woulda. I know it's not good to think like that, but I probably could have made 20,000 on that or so. It happens. And the next day, really nice consolidation, holds a range. And if you look at the big picture, what is really happening? So this breakout, it's essentially saying I'm holding the former support levels and I'm holding gains. And when something holds gains and holds a range above the breakout area, it can continue. And it just kept ramping with more volatility, just more explosiveness. What do you get? Right? You get the breakout, it holds a range, and then it continues the breakout. And this time it goes from 27 to 70. And at that point I just wasn't really willing to play it. Looking back, it doesn't make a whole lot of sense why I wasn't willing. I think what I tend to do if I miss this first minute it's always the plays that move an insane amount in the first minute that make me feel like I'm already chasing out the gate to the point where I don't really want to get involved. And then it just keeps running. And but you know what? I could have taken this. This is like really nice consolidation. I could have gotten involved, and I just chose not to. It's just very overextended at that point. So to sum this video up, I would just say it's a lot of the same things that I've talked about in the past. Just repeated. Repeated at a different time on a different stock. Every stock has its own scale. So just got to kind of always be aware of the different time frames, the different scales. This is that first move. You get the pullback, some higher lows, some consolidation. Whatever it looks like, there's going to be some things in between, perhaps. It's not an exact science. Just gotta get the feel for it and experiment with some different spots, because you don't know which spot will necessarily work. I think people just got to get comfortable with experimenting a bit and being alright with taking those small losses before you get the big wins, because it's important. It's important to know you're going to be wrong a lot. That's what trading is. You're literally guessing. You're going to be wrong a lot. You're guessing at spots that you think are going to be really good. Well, not every spot's going to be great, obviously. Sometimes you're going to have to cut. And I think, I posted the good trades, the winning trades, and then it might give some people the wrong idea. The truth is, which it's public, obviously, my win rate is 40%. That's public. And if anybody clicks on my profile and looks at my career results, they'll see 40% win rate. I'm wrong more than I'm right. But I can really, cut those losses fast when I'm wrong. And when I'm right, these things explode so high that I don't even need to catch the upside. I can just sell it like here, right here or something, and still make so much more money than I lose. It just doesn't matter. It just doesn't matter that I lose more trades than I win. Just control losses, let your winners run. Percentages speak for themselves, It's pretty crazy. I'm up almost profitable overall in my career. Almost 1.5 million now. It's pretty crazy. It just doesn't seem that long ago that I was at $1 million. Now I'm coming up on the 1.5 mil. You do have to be careful though. The $22,000 loss, obviously. I say June was my best month, but obviously more red days. This whole year has been full of more red days for me. More downswings, more red days. And it's tricky because it's like, is this happening because I'm more comfortable with the variance, and is it helping me overall? Am I making more money because I'm more comfortable with taking these big losses and kind of letting the percentages work themselves out? Or am I getting sloppy because I'm getting to the point where I'm getting very good at trading and I'm making a lot of money? Am I mistaking the red days as kind of part of it? Is it possible that's not part of it? Is it possible I would be making even more money if I could find that discipline, stop getting so loose and over trading in certain spots? And is there a balance to be found there, or could I tighten that up and go back to that insane, on a day-to-day? I know for 2020, I think the exact number was 94% of the trading days were green days. That's absurd. You know, that was crazy. And it's much different this year. It is much different. I think this year I've probably 70% green days. I mean, it's much different. So I'm not sure if I'm mistaking this lack of discipline as part of scaling up, as part of making more money. I'm gonna have to look more into it, is what I'm getting at. I have a feeling I'm bleeding money in a lot of spots that I just shouldn't be bleeding money due to lack of discipline. And I think just the incredible gains that I've made this year are clouding my judgment when it comes to the discipline problems. I am over $1 million on the year in profits, which I think for anybody that would cloud your judgment a bit. You can definitely mistake bad trading for good. And I don't mean that the profits were luck or anything like that. I just mean I could probably be making a lot more. Really bleeding money in a lot of spots, but that's fine. Yeah, I guess I should get back to the video here. That was kind of a weird rant, a little ramble there. Kind of tired. Okay, so to sum it up, yeah, everything's the same. Which leads me to my next thing. I mean, every video I just say the same thing over and over. I just hope that people don't get, tired of it. I mean, it's always good studying to make these videos, so I don't mind, but I've probably been making them less often just because I do feel like I'm a broken record at this point. You know, I'm literally just going over the same concepts over and over because everything is pretty much the same. Same patterns, you know, and so going forward, I'm just going to try to stop overtrading, be more disciplined, and see what the effects might be. I have a feeling I'm making huge errors in these spots, but overall, the year is going better than I could have ever imagined. I'm grateful for what trading has brought to me, definitely. But we always got to push to try to be better, try to do better. Because, yes, in trading you can make a lot of money, but you can lose a lot. And, you know, a lot of people like to talk about how you can make X amount of money compared to people outside of trading or whatever. It's like, that might be true. That is true, yes. But in trading, you can also lose an annual salary in a day if you lose discipline. Luckily, I'm a long, biased trader. So if I lose discipline, I'm not going to blow up in a day, okay? You know, that's the scary thing about being a short trader. You lose discipline for one day, you can potentially ruin your life. I mean, you gotta be very disciplined to be a short trader. Essentially, it allows you to short to infinity, and it can squeeze to, in theory, infinity. You know, you can just keep adding to your position as it goes up. Infinity. You can just keep adding because it can, in theory, keep going forever. We all know it's not going to go forever, but you get the point. You can keep adding basically to any point, and then it can keep squeezing to any point. Whereas if you go long, that's not a thing. That's not a thing. Like, you're just not going to blow up when you go long. You're not going to blow up in a day. It's just not a thing. It doesn't happen. And that's why I'm so thankful that I'm a long bias trader. It's like it's just probably the best decision I think I made for me personally, my personality type. Focusing on just learning the long side before even getting involved in the short side was like the best decision. And now I'm definitely practicing more with like, just different short ideas, and I've really nailed some amazing short paper trades, and I've been paper trading for months on the short side. I will most definitely open an account for shorting. I will do that, definitely. And right now I'm just paper trading short side. It's going really, really well. Very, very well. I'm getting very comfortable with it. And yeah, it's a whole different ball game for sure. It's a whole different ball game. Yeah, it's the same concept though. I mean, it's the same concept as the long side. You just gotta wait until it's backside. Just like if you're a long bias trader, you have to play front side and avoid backside. If you're short, you have to avoid front side. And you start shorting once it's hit the backside. The problem is people don't really understand how to know if it's front side or backside. Kind of the more I trade and the more I've seen people trade, and there's just something I noticed. It just seems like a concept that either misses people or they don't take it seriously. But fundamentally, it's very important. It's very important. It's the most important concept in trading, and a lot of people ignore it. A lot of people will ignore frontside or backside concepts, and it's a huge mistake. It's a huge mistake. Huge mistake. So all that time that you're wasting on a fundamentally flawed play, you could be taking that same energy and finding a play that is fundamentally sound and making loads more money with less risk. And that's the main concept that people don't seem to get is the reason why these plays are so awful. Besides the fundamental part, it's just the fact that you're wasting so much energy when you could be finding plays that are exponentially better. That's why frontside and backside is the most important concept in trading. And I think it's very misunderstood. Alright, well, I'm tired. I'm going to go to bed now. So, thanks for watching the video. Try to make some more content soon. I'll try to upload more frequently because I've been slacking. I've been slacking on the YouTube side and the video side. I know I just haven't been making as much content as I could be. And I'll try to get back into it. Alright, see you.